So that's one thing, is that these things, and you just mentioned you're an angel investor in Legion. Legion is VC backed. So like
VC backed and incubated.
Yeah, exactly. And CoinList, VC backed. Almost all these platforms are also themselves VC backed. So the idea that like, oh, there's all these things that are circumventing VCs entirely is kind of a bullshit narrative.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Mike, Haseeb, great to be here with you both. Thank you so much for taking the time to chat with me.
Thank you.
Yeah, let's do it.
Today we're going to be talking about crypto and VCs, specifically if VCs still matter. Before we get started, do you guys want to give a short introduction of yourselves?
Short introduction, I'm a VC.
Very good.
Yeah, I'm an extremely consequential VC.
Very
I still matter. That's my intro.
To get us started, why do you still matter, I guess?
I feel attacked. I will say I feel attacked. So maybe we should start with like why VCs don't matter, because obviously, I think this question would have seemed very strange even just a couple years ago. We've seen the rise over the last couple of years of a few trends that are kind of these anti-VC trends that have emerged. One of them, of course, being the rise of these crowd sale platforms like Echo. And of course, CoinList has pre-existed for a long time, but Echo is kind of defining the current meta. The second trend is the rise of Memecoins. And launching startups not through VCs, but through something like Pump.fun, beyond just meme coins. And then the third has been the rise of these purely quote-unquote fair-launched projects like, the two most prominent examples have been Jupiter and Hyperliquid, which were entirely self-financed, airdropped to the community, no VC allocation whatsoever. So these three trends, I think, are defining something different about this meta that feels not like previous cycles where VCs were just assumed to be part of the baking process of how startups get created.
And there's a fourth one, I believe, which is the way that VC coins, meaning VC-backed projects, have launched, looks to many people, and based on price action, to be extractive. But what we'll argue in this panel, is that that's not solely or even perhaps primarily due to VCs, but to structural things about exchanges, et cetera.
I mean, I think that vibe shift has already swung back just because like meme coins are down so much from the high and VC coins have outperformed over basically the last 3 months. So I feel like I'm not feeling as much of that, of like, oh, VC coins, high FTV, low float, blah, blah, blah. That kind of hit a crescendo like mid last year. But it feels like that's really come in since the beginning of this year, just because all the meme coin financial nihilist people are just kind of down so bad they don't speak up much anymore.
Okay, fair. So we've checked one off already. Good, we solved that.
Yeah. So I think those are the reasons why people say, oh, hey, do VCs still matter? So I can summarize my counter arguments and curious what your take is. So the first prong is Echo and these kind of crowd sale platforms. The reality is that if you look at Echo, so actually the recent Echo sales that have happened in the last month or so, most of them have actually been pretty shitty. So they've kind of underwhelmed. They didn't sell out. So that's been disappointing. But if you look at the really big ones, they were all VC backed, right? So like probably the most famous one is Mega ETH, which we actually led Mega ETH's most recent round before their Echo sale. And so if you notice like on Echo or you look on Legion or whatever, almost every single one of the projects that are listed there are VC backed.
Literally, I'm an angel investor in Legion, and they ask me before they offer a token or equity to folks on the platform, hey, is this a legitimate project? So VCs are basically, I would say, the single best signal of what should be listed on these sort of open community launch platforms.
Exactly. So like VCs, I mean, obviously VCs have multiple different functions in the market. The reality is that one of the functions of VCs is kind of as underwriter. And it's obviously, I hope there are no regulars in the room, but like that's kind of the way that the market looks at it. It's like, oh, well, this is a Dragonfly quality project. This is a Hack VC quality project. Okay, what does that mean?
Those are the same, right?
Yeah, exactly. That's what I'm implying. And so that signal, the market takes that signal very seriously, right? You go look at something on Legion or Echo, first thing you look at is who are the VCs? You don't look at, oh, well, let me read the white paper and like look in the background of the founders and like go trace their LinkedIn and read every tweet they've ever written. We do that. Retail investors do not do that, right? Because they don't have time. There's no, it's like this specialization. This is what the foundation of every fucking market ever is, that some people specialize and do certain work so that other people don't have to. So that's one thing, is that these things, and you just mentioned you're an angel investor in Legion. Legion is VC backed. So like
VC backed and incubated.
Yeah, exactly. And Coinlist, VC backed. Almost all these platforms are also themselves VC backed. So the idea that like, oh, there's all these things that are circumventing VCs entirely is kind of a bullshit narrative.
By the time the thing gets to the point where it's a community fair launch project like Hyperliquid, things been in development for multiple years. In the case of Hyperliquid, fortunately, there was a wealthy set of founders who could self-fund the thing to the point where it could get to a public launch. In most cases, that's not possible, and you need folks who will underwrite with a time horizon of more than 3 weeks, because let's be honest, like the things today that people are excited about is not the same things that they're going to be excited about 1 month from now. You look at anything that's quote unquote hot right now. This could be a SocialFi project, a GameFi project. This could even be, I mean, we're getting to the point where like stablecoin projects have, if somebody invests in it, they literally are, people are expecting returns, they're expecting growth. They don't want founders to be heads down for even 6, 9, 12 months. They want a product that is growing, that they can talk about, that people can see tangible results within literally days, weeks, months from the moment that they put money into it. And they're expecting, many investors today, this goes back to the ICO days, liquidity. They're expecting that within months. And that's simply not the way that long-term durational businesses are built. If you look at the best ICO projects, many of them, Aave would be an example of this, right? I think, what was the ICO, like 2018? Aave is hitting its absolute best stride today, 6+ years later. And frankly, because it's had support from, wait a moment, VCs in the liquid markets, in foundation sales. I guess I'm getting ahead of the point. We were talking about sort of early private VC, but what's happening now is we're seeing many projects that I would argue got sort of caught up in this fair launch meta. You look at pretty much any AI agent project that launched a token, the token went up to X, the token's down 95 to 98% from X, and the company was not able to sell, there was no buyer, they didn't even get any portion of supply, and they're sitting on like, hey, we've got a couple $100,000 and we have a team, and like, what are we doing? Like, I don't know how we're gonna do this. Hey, Mike, or hey Haseeb, are you guys willing to invest at a pre-seed valuation, and let's get out there and let's jumpstart this business. Here's our pitch deck, and we're like, what do you mean? Like you literally already put your value out into the world. You have a community, you have a product out there. People speculated on it. They perceive the token as the product, and there's probably a really great platform here that you want to build, that you can build, but you sort of shot it out there. There's nothing. There's not a second chance. All right, I made like 10 points there that weren't coherent. Haseeb, bring me back to coherence.
Yeah, look, I think you made an excellent set of points, and starting with starting with the Hyperliquid thing. Like Hyperliquid was funded to the tune of like $10 million+ before launching their token. The number of founders who can do that is basically zero, right? Like almost nobody. It's basically Hyperliquid and Jupiter, both self-financed, huge amounts of money that basically the founders were independently wealthy. Almost no founders are in that position. So that makes it very, very difficult for people to really follow their footsteps. Now you look at most of the other fair launches, like I don't know why people still think that this is a good idea. You go back to the last cycle, the classic fair launch was Yearn. Right, that they literally invented the fucking term. And Andre Cronje, to this day, complains about what a horrible idea it was to fair launch, right? He's now like 5 projects later being like, man, I should never fair launch anything. You people are animals. Like, you guys treat founders like shit. I should have just raised from VCs, right? And he's the guy who made the whole thing.
He still can't help himself, though.
Yeah, no, totally. So, like, I think if you look at I mean, I see the same thing that you see, which is that a lot of these projects that were like, hey, fair launches are cool, we should do fair launch. They do a fair launch. They have a token out there. Retail speculates on the token. Token's worth 100 million. They come to us and they say, hey, I own like nothing of this token because I don't know. It just happened. We got excited. We did a thing. And like, I think I might have a business. Can we raise VC money? And I'm like, for what? You don't own anything. There's a meme coin that's out there that's like trading. And they're, but we'll like change the token. We'll like make them give us some more token. Like, dude, do you see what happened with Jupiter? When Jupiter was like, hey, our team doesn't own enough of this token. We would like to ask the community to give some tokens to our team. And the community's like, fuck you. Your token's already down. What are you doing to us? Right? Like, okay, well, yes, this is what happens when you basically put corporate governance in charge of random people who got free money. Right? They say, yeah, they don't know what to do. They're just like, that sounds like a lot of money, and my token's down, so you're a dick. Fuck you. Okay? This is why companies are not run by shareholders. Because, like, yeah, people are emotional. People get mad. People are like, yeah, I'm down and I'm mad and I want you to pay for it. And this is not how VCs operate, right? Anytime you see one of these class action lawsuits against a token founder, it's almost always, it's a retail investor. It's always a retail investor.
Who spent $7? Who spent $7?
Yeah, a retail investor who spent $7. That's often also the case. So, like, the reality is that when you're building something, it takes a long time to build something. And crypto is volatile as hell. It's crazy to try to build a crypto startup. So you're going through these ups and downs. Sometimes you're a hero. Sometimes everyone hates you. Sometimes things are going well. Sometimes they're going terribly. And the value of VC is that we get it. We're patient. We understand what you're building, and we can actually help. We're not just in your Discord every day asking when token.
Yeah, and the only reason, or one of the reasons that that VCs are not viewed that way, we should delineate. Like, Dragonfly is a great VC. I think Six Man Ventures is a great VC. There are a lot of really atrocious VCs, right? There are prop shops. There are, scammers. There are a tremendous number of people out there giving money to projects, market makers, active market makers who are supremely.
I think you just upset some market makers.
Do we have any active market makers?
Oh,
okay, all right. Can you please leave?
It's fine. We don't need them. We don't need them. Do market makers matter? That should be the. I'm kidding.
Depends on if the coin has any value. If not, they do. Sorry. But the point is, there are a lot of folks who are called VCs who aren't. I think what we're, just to be clear, talking about are folks who have built businesses before, who have built protocols, and are going to be with you for 3, 5, 7, 10 years, whatever the journey is. And sure, hey, may sell tokens at some point or equity along the way, but in conversation with the founding team, explaining the reasons for it, continuing to hold generally unless situations change and bad things happen or whatever the case may be. But the point is long-term partners in your growth journey. And so that's not the default still. I would argue there's probably only 15 to 20 firms that operate like that in crypto. So I think good VCs matter, bad ones don't.
Okay.
You only asked one question so far, right?
Yes.
Okay.
Sorry, I thought he was going to be more chill than me, but
I'm here for it.
All of the questions I had written down as well. So I'm going to have to take the opposite side and say, what is a valid criticism of good VCs right now?
What's a valid criticism of good VCs? I think one thing is that a lot of VCs, and a lot of what I would call even good VCs, they bullshit a lot. And this is one thing that I think I can see it. This is one of the reasons why we've grown in popularity as a firm, is that we say what we actually think. If you look at a lot of firms in crypto, even like some of the most stalwart firms that you think of as like, okay, these guys are great, good actors in the space. They've been good stewards of the industry. They've been helping us on the regulatory side. A lot of really great stuff, but they don't own the mistakes of the industry. And the reality is that we have fucked up so many times. Like if you just look back of like NFTs or play to earn or Terra or FTX or like all this stuff, and like there's a reason why a lot of people look at what VCs do and are like, you guys are not that different from us. You're also investing in scams. You're also doing a lot of stupid shit and enabling bad behavior. And it's true for a lot of VCs. And being able to talk lucidly about it, is something that most VCs just do not do. And I think that's one of the reasons why a lot of VCs have lost trust with many people in the community, is because the community sees it. It's like, yeah, obvious. We were hearing you guys talk about play to earn constantly, and then it just totally collapsed, and no one like admitted it. That like, yeah, you guys were helping enable this thing. And I think that is that's a large part of the heart of why people find VCs to be so distasteful.
Absolutely. Like, and another example would be, hey, we need to sufficiently decentralize, and like the entire thing here is we're doing that over time. And then, like, let's be honest, like you saw the Uniswap proposal, like we've seen a bunch of others that are controlled by a very, very concentrated group of folks who are basically putting out research papers, thought pieces, tweets, this, that, and the other thing, who are funding, you know, the 70th L1 of this year, who are like literally, if we look at like the biggest L1 that's like going, like Story Protocol, for example, while we're saying like, that's like, why does that exist? I don't know. It doesn't exist organically in any way, shape, or form, while putting out a bunch of really highfalutin moralistic pieces about everything else in the ecosystem. It's bullshit. Be fucking honest about the industry. And I'm getting tired of it. It sounds like Haseeb is too. We're very honest about the things we support. We're investors in Pump.Fund. I believe that Pump.Fund, in the long run, will be a very positive protocol, a very positive product for the industry. And I'll stand behind it. And I'm not going to bullshit you and tell you I don't stand behind it. At the same time, we invest in stablecoin products. But I'm not going to put out a bunch of pieces, not talk about things publicly that seem somewhat, you know, like, or say this thing's unsavory, while in the background I'm voting for extractive things for the protocols I've invested in, and then investing in a bunch of L1s that are useless and propping the price up.
So would you say that we have too much infrastructure right now?
Of course.
I disagree.
Go for it.
So the whole idea
He's invested
of this,
a few more L1s than I have.
Yeah, this guy's a Pump.Fund guy.
Yeah, we'll get into this. Monad versus Pump.Fund.
Yeah, that's right. So look,
actually an angel monad. So
I think it's a very simple. I think it's a very simple equation, which is that are we done? Are we done building blockchains? Right? Is this the final form? Like right now, Solana. All we had to do is get Trump to launch a meme coin, and Solana fucking collapsed in on itself. Like, you know, Phantom fell over, nothing was working, the RPCs are all dying, and you're really going to tell me that, like, yeah, we're done?
That's because Phantom misconfigured a bunch of shit.
Like, look, the reality is that if we want more than 10 million people to be using public blockchains, we're not done. We're nowhere near done. There's no fucking technology
Is Mega ETH the answer?
What's that?
Is Mega ETH the answer?
I think it's a shot on goal to try to come up with an answer. And there's going to be many people trying to answer it, but like it's like saying, like, well, who could possibly want more than like, you know, a gigabyte of RAM? And the answer is like, yeah, fucking the entire world needs way more RAM, way more scaling, way more everything. So no technology stands still and says, you know what, we have too much infrastructure, we're done now. We're not going to make more computers. We're not going to make more GPUs. We're not going to make more RAM. We're not going to, you know. No, the answer is obviously no.
And by the way, the reason I can take your answer seriously is that you guys do invest in some of the biggest applications in crypto as well. I'm not going to kiss your ass too much, but like Athena and a bunch of consumer stuff, DeFi. So, you know, DePen, right, Dawn, which we invested in. So I think you earnestly believe that. I do think there are some other large cynical investors who would default about 80% to infrastructure investment, and I think that's a problem. I think
I take the other side of that too. Like, so let's say there's a VC out there who doesn't invest in applications; they only invest in infrastructure. I think there's nothing wrong with that VC. I mean, at the end of the day, if they're investing in bad infrastructure, okay, that's malinvestment. That's bad, but like they internalize the cost. Or the
problem is there's no bad infrastructure investments right now because of the artificial.
That is not true.
I read your Solana piece, and then I saw you saying, "Look, you don't hear about the ones we invested in that didn't work out."
Yeah.
But the issue is that the structure of the market is such that it only takes a couple infrastructure investments that get hot, that capture the imagination of global retail. Not that much liquidity in the grand scheme of things to actually return on that.
Go look at the portfolio of like a random Chinese fund that's backing random infrastructure projects. And look at their,
but it gets back to your earlier point on because Dragonfly blessed this thing, people will invest in it. And I do believe
because Dragonfly invests in this thing, right? Like we invest in this thing because it's good, and retail investors see that as a signal, but it's not causal, right? If we didn't invest, some other great VC, maybe you guys would invest,
So
and people would look at that.
That
and say,
might be
"These
true.
guys are
Actually,
legit."
you've done a good job. You actually may be the best. But the L2s, like they're straight down. Like look at Scroll, look at a bunch of these other ones, and these are ones that retail invested in at a very high valuation because of that check mark. And honestly, that's the trend. Like the aggregate value of all these things since launch is massively down.
Absolutely, but that's true of everything, right? That's true of everything. What is the exception to that rule?
Bitcoin in the same time period.
So
like
Bitcoin.
Solana,
Yes, okay,
Solana
so
in the
Bitcoin's
same
doing
time
well,
period.
alts are doing badly. So like, okay, yeah, L2s are down.
But like Solana. in the
Okay,
same
but like,
time
well,
period.
look at applications. Like, what about gaming tokens? What about any of these other things that you could have said? I don't want to own L2s. I'll own this instead. Go own some IoT tokens. Go own some fucking.
What's interesting
data
is like,
tokens.
yeah. So,
Own a GPU marketplace.
so it's a question about tokens now. We're getting a little far afield the VC, but I will go with tokens.
I think we're right
There's
on
a
topic.
question of
I think
whether
we're right on top.
Yeah, the question is whether there's sustainable token value, right? Like we invest in Steppen and play to earn.
Yeah.
We invest in something I believe. I'll actually address this one head on. Like the pitch was move and earn, and we're going to have sinks. And by the way, they didn't create the sinks. Like they created something that
I mean, they
wasn't
tried.
what we invested in. Is that the VC's fault? I don't know. There are, by the way, a bunch of mechanisms trying to come to market to try to correct for that. The reason gaming hasn't worked, I would argue, over the last 2-3 years, I think it is a segment or a sector that will work, is because crypto is inherently speculative. These are things that trade 24/7, 365. That's the point. It is the product for these games. We've been investing in much simpler things, right? So things that people, like you've seen, we're investors in Magic Eden. It does well because there's just constant flow through it. Again, Steppen did incredibly well because they had their own AMM. They took fees. There was just constant flow, pump.fun, nonstop flow. We're doing one called football.fun, which is effectively so rare, but the actual players are liquid tokens. I think that's a good thing. Like people want to actually have fun, speculate, and use these things nonstop. But to your point, we've, as an industry, had a horrible track record of creating long-term, sustainable, durable value for tokens. Yeah, outside of infrastructure. Fucking kills me to say that.
Well, I'll take.
I
that
worked
as a W.
through that in real
I'll take that
time.
as a
You're
W.
welcome. Like I
Okay.
just actually worked.
But I will look. I will say this: is that like I don't fault people who invested into play to earn at the time that it was hot, right? I think like there's fog of war. Nobody really knew how it was going to play out. But once it's over, and everybody sees very clearly, okay, play to earn doesn't fucking work. Play to earn is a disaster. Like giving people free tokens to play your game is fucking stupid. Right? It's like the opposite direction of how the flow of capital is supposed to work. Is that gamers are supposed to pay money to play your game, not get paid.
They did buy NFTs, but then the value of those NFTs was
so right,
rugged.
exactly.
Yeah, it
so
was-
like
it was a mess,
this
yeah.
whole like yes, okay, there were multiple steps in this process, but like that concept is just it was backwards land. It was just like fucking ass backwards stuff that we all collectively just sort of wound ourselves up into. They're like, oh, this kind of makes up metaverse. This kind of
Ownership economy, sir.
yeah. What's that?
Ownership economy.
Ownership economy, yeah, absolutely. And so, look, the collective delusion, we all had it, right? And I found myself, even when I was criticizing play to earn, and I was like, this is unsustainable bullshit, and it obviously doesn't make sense. I was like, fuck, maybe I'm wrong. Like these guys are making all this money, Steppen's going up, and Axie Infinity's going up. Like maybe I'm wrong. And of course, you cannot be human and not have that voice in the back of your head that maybe I'm wrong, and financial alchemy has totally worked, and like the laws of physics have been reversed, right? You just never know. So turns out it didn't happen, but like, what's the learning? What's the learning? Did we learn? Like, okay, if we learned, tell them, what did we learn? Like I think the answer is that, of course, the economics of any system need to make sense from the beginning.
Correct. Yeah. So you have to have an actual buy-in, like a
Yes.
real buy-in. The earn component can't be juiced so much that it becomes economically like irrational, and there have to be real sinks. And the sinks could be I have to stake or pay to earn more value in XYZ. That being said, it's yet to be done. I can't think of a protocol that's actually demonstrated this in gaming yet.
Yeah, look,
to
I mean,
date.
I'm generally pretty skeptical of gaming, but I will say that I think you're absolutely right. The core, the beating heart of crypto is always about money.
Yep.
And the best game you can play with money is gambling.
Correct. Yep.
And so I think in that sense, Pump.Fun is the best game in crypto.
Yes.
And I think if you think about it as a game, suddenly it's like really obvious why it works so well. Is that you're sort of role playing being a crypto trader, but the crypto trader tickers are all stupid pictures of memes, and the volatility is like jacked up to 11. Liquidity is basically zero. Everything turns over in like 24 hours.
And they're going to move. I mean, you saw they launched AMM today. They're going to move into reward. Like they reward creators. The whole design is reward creators who create these pools. It's effectively going to be TikTok with money. We'll see if that works.
Yeah.
But like the amount of time people spend on these creator platforms, there's a plausible scenario in which just time equates with money. Time.fun is another one, by the way.
Sure.
I don't know why it needs a token per se. I don't know. Like maybe I can make more money than $40 per tweet, or sorry, per DM. But I do think this like sort of time for money and attention does have some element of.
Okay, now we're slightly off topic. What
right,
are we supposed to be talking about?
We have one. I think we can do one more question, which should be on meme coins. I think. Where do you guys think that is going? We've had the past year and a half dominated by meme coins. Will that last? I know we touched on it a bit, but I feel like this will make you guys fight.
So like Austin Campbell at the back of the room, I think meme coins are the most important innovation in crypto, since Bitcoin.
The most important innovation. Okay. All right, because I was ready to jump
he
on
hates
you.
them. You start.
Okay. I think meme coins are basically. I think they're basically fine. I think the philosophy that generated around meme coins was extremely destructive. Like this idea that, well, nothing we built here matters, all this financial nihilism shit. I think that was really, really bad for the industry. I think it's clearly already peaked and it's on the decline. I think, I'm telling you things you already know, which is that meme coins are down bad. Everybody suddenly feels stupid. All the generational wealth that people thought they had, like they lost it all back, which is always what happens in every single one of these cycles. People think they're now unfathomably wealthy, and like there's 5 people who actually cash out, and everybody else is just greedy and just keeps playing the game until they lose it all back. And so I think the story one is that Pump.Fun made an amazing game. That game was very popular. I don't think the long-term equilibrium is going to be, well, meme coins go away. Obviously, we're not talking about the big meme coins like Doge or things like this. These are very different from the meme coin game. The meme coin game is played with these low-cap shitters that are coming out every single day. That's the meme coin game, and that's what we're talking about. Doge is Doge. It will always exist. It'll never go away. I think for this game, the meme coin game, I think it's going to pancake over time. Probably not yet. Probably there's going to be another run of the mill when we have some macro reversal and risk assets go up, and it's like, oh, suddenly everything's okay again, and we have like a second hump. I think that's probably going to happen with meme coins. But like people have already lifted the rock and they see all the little bugs of like, oh, Kelsier Ventures and Melania and like, oh, all these snipers and grifters that are taking a piece of the action, and suddenly it like doesn't feel quite as pure and quite as rebellious anymore. Now it kind of feels like, oh, I see the supply chain of the casino, and I see all the little fees and I see all the firms that are optimizing the casino slot machines to extract the exact right amount of money from me every time. I read a book about it, and now I know it's there, and I can't unsee it. I think more and more people feel that way about meme coins, and that kind of means that the movement can't quite, get all the way to where it was previously. But my claim is that when this stuff pancakes, and memes don't automatically make money anymore, there will be some cohort of people who will just keep playing this game forever. Even when it stops making money, it stops being cool, it stops being the thing that everyone's doing. In the same way, there's still people buying NFT mints. There's not a ton, but there's still people buying those NFT mints, and like they're just going to do that forever. I saw a documentary recently, like a short video documentary about Cookie Clicker. How many people know? Do anyone know what Cookie Clicker is? Only a few people. Okay, you know Cookie Clicker. So Cookie Clicker is this like really terrible idle game. It's basically like a browser game where you click on a picture of a cookie, and you click enough times that you can like make things that automatically will click the cookie for you. It's the stupidest game ever invented. But it's like there was a moment in like 2015 where this was like a viral game that everyone played for like 10 minutes. There's people who still play Cookie Clicker. And they interviewed one of these guys, and one of these guys was like, I will play Cookie Clicker until I'm an old man. And I want my kids to play Cookie Clicker. And like for any game, no matter how stupid it is, there's somebody who's just like, they're just never going to let go of that game. And for meme coins, I think there's probably like 50,000 people for whom they will never let go of meme coins, no matter what. Like there will be a new hot thing in crypto, there will be a new trend. Everyone's gonna be making money and getting unfathomably rich on the new thing, and everyone else is gonna feel stupid and way too old. But the meme coin guys will be like, but I just love trading pictures of the coolest memes.
I think they're gonna evolve a bit. I just talked about the TikTok thing.
Yeah.
Creators are gonna everybody's gonna have their own coin in the same way. Like, dude, if you told people 20 years ago that people were like, my kids like want me to buy like Roblox, Robux and Fortnite skins and this and the other thing. It's like we would have said 15 years ago, this is completely worthless. I believe that meme coins are sort of the evolution of attention. By the way, even getting more specific, like it's not a perfect analogy, but like 90% of the S&P 500 is an intangible value, right? There's just not that many hard assets in the world anymore. There's brand value, there's like attention value, there's IP value, like whatever. Bottom line is we're moving to a world of like very few, in my estimation and like the actual data, hard assets and just a lot of value around attention, things that are cool, things that are hip, things that people talk about, and things that people are paying attention to. I think the number will be more than the 50,000 people. I think it's that meme coins tied to, or tokens, again, value, tradable value, tied to attention, tied to personalities, tied to the things we cared about, tied to communities, will actually be a significantly increasing portion of where people are allocating their, hard-earned McDonald's salary to. It's just going to happen because there's the potential, as we talked about, it's a speculative economy for 100x. And that's increasingly what people are looking for. Whether it's sad or not, it's the reality.
All right, before we wrap, I want to take a quick spot check of the room. So given our two views on meme coins, how many people, raise your hand, agree with Mike's view of meme coins? Okay, how many people agree with...
You guys are getting it so rich.
How many people agree with my view of meme coins?
Relatively split.
It's pretty even.
Yeah.
This is what makes markets.
Okay, that's good. All right, I guess we'll see in a year or so who's going to turn out to be correct. What about digital...
Didn't that go away?
Digital land? Yeah,
Sandbox? He's the guy buying Sandbox still.
Okay.
There are 1,000 of those.
There's somebody still buying everything that existed in the last cycle.
My friend Drew Austin is still buying Sandbox land.
That's beautiful. A wonderful note to end on.
I'm sad we have to end it, but Mike, Haseeb, thank you guys so much for coming on.
Thanks for having us.